What's up guys, welcome to another video. Today's video, I'm just going to be backtesting the 1 hour time frame. Now this is a time frame that a lot of people, most people trade on the 1 hour time frame. But as you guys can see, I've done some of my own research. I just thought of making this video, live stream for that matter. As you guys can see, okay. So as you can see, we have a fair value gap tap, and we have a retracement array. But look at this for example, okay? So you can see that this is a sweep of liquidity, 0.5 holding, and then we have this retracement array, right? So this is the 4 hour time frame. So let's switch to the 1 hour time frame. So a different pair because I did backtest this on AUD USD, and seems pretty good. So let's go to some random spot in time. Again, the weekly ranges apply regardless, and it seems like there's a lot of choppy price action here. Honestly, not the type of thing that I prefer, but make sure okay. So for instance, we have a fair value gap over here. Okay, but as you can see, we have a bunch of rejection wicks. I'm assuming this is coming off some sort of weekly level. Let's go to the weekly level. Pretty sure there's some sort of rejection at the top. Okay, it seems like there's no rejection on the top. So we have a distribution towards the upside. So we have a lot more bullish pressure, obviously. So I'm still expecting price to be very bullish, but aligning this with the lower time frame. Again, this is the important part, right? So we have a swing low to swing high. So we'll always look for an entry from discount, right? Oh my god. Give me a second, guys. Okay. So I would expect a retracement towards discount, to be honest. And yeah, so we would expect a retracement towards discount. That's below 0.5. And then we would expect a retracement away from it. Okay, so it doesn't seem like it would retrace this time, but it's okay. So as you can see, we have a 2 candle rejection right here because this is holding 0.5. Just gonna get rid of this first, okay? So as you can see, it's holding 0.5. As you can see on this 2nd hour candle. And you can see if we buy from here, if we put our stops at the low, and if we put our stops TP here. Okay, let's see what the problem here was. Okay, so keep in mind this is the 1 hour time frame. So I'm used to 4 hour time frame, and there's a lot more noise here, right? So I think the general concept we should be doing here is rather using OT ranges of the current dealing range. Let's try using a discount entry. Okay, so now we have a discount entry, but we have a major market structure shift at this point. So we have gone from bullish to, we have a rejection wick here as well, right? We've gone from bullish to bearish now because it's rejecting this price level. It's retracing away, but it's also rejecting this price level, which makes me want to expect a next candle to close in this range. But not quite. Okay, so it seems like it's rejecting this price level. Let's expect to hold this 0.5. Let's see if we hold towards the closest draw on liquidity. That'll be over here. It's not the best price action, to be honest, but okay, it does eventually hit. As you guys can see, this is the draw on liquidity, and yeah, it does eventually hit. And yeah, this was a sweep of liquidity. As you can see, this is a sweep of liquidity, liquidity sweep. We have a retracement right after, right? So you want to always set your TP slightly lower. It does not come here, but always make sure you set it a little lower, and it does retrace away to the closest draw on liquidity. Now that's not impossible. So as you can see, we have a it did close above the previous draw on liquidity. As you can see, if you look at this bar right here, slightly close above the previous draw on liquidity, uses this as a support level, the fair value gap, and then it retraces away. So as you can see, this does not quite retrace to 0.5, but it does retrace away. But again, we have a lot more rejection wicks, so I wouldn't trust this range whatsoever. So yeah, we would expect a second retracement towards the fair value gap, and let's see if we can. Okay, so it seems like a massive consolidation right here. Okay, so does not seem like price is still consolidating for, okay, so price is now on a downtrend, so we've gotten a invalidation right here, but this does not mean it's a market structure shift, it just means that it's a invalidation. Okay, for example, right here we have a retracement away, and it seems like it's retracing away. Okay. Okay, so we have this fair value gap, we have this sweep of liquidity, and it seems like it's holding this 0.5. See if it's holding this 0.5. Okay, it's holding this 0.5. And let's put a stops right below. Put a TP right here. See if this plays out. Does not quite seem like it. Again, on the 1 hour time frame, this is exactly what I hate about the 1 hour time frame. There's so much noise that it becomes too much, and yeah, it's just not. Honestly, I don't think I would prefer trading on this, to be honest. There's so much noise here. Because we go from like an uptrend. Okay, so we go from like this high. We do in fact have a market structure shift here. Because this does close below this drawn liquidity. Oh no, not really. I'm actually retarded. Because in this case, when you're looking for a change of characters, you should always look for the real drawn liquidity. In this case, it would reject this price level, and then it would eventually go up here, but then eventually it does retrace away as well. So you need to always understand, and you need to always understand it. So pretty much, as you guys can see, so this is a sweep of liquidity, and the next few candles, as you can see, it's retracing away. So it's holding this price level from this sweep of liquidity. So for example, it's rejecting this price level. As you can see, it's sweeping this liquidity close back in this range, and you can see that this is holding this 0.5, and we will have a drawn liquidity over here, and we'll target towards here, put our stops slightly lower, and let's see what it does. Almost, see, exactly on the 1 hour time frame, there's so much noise. Okay, why did this happen, right? So let's see why this happened, right? Because we are not considering the weekly levels, right? Right now I'm just looking at the 1 hour time frame. As you can see, we have a draw on liquidity, and we have this change of character right here. So this low has been broken through, this pullback, and then it just rushes towards the lows, because there's a lot more bearish pressure that in the markets right now. So as you can see, this fair value gap is tapped, it traces away, now it sweeps this liquidity, and then it traces away as soon as possible as well. So as you can see, we have a 0.5. It does not quite retrace to 0.5, but it does eventually dip. And right here, as you can see, we have a rejection. I think it's from this price action. Okay, so it does close slightly below, but I wouldn't consider this to be a closure. I would rather consider this to be a... Okay, so now we have a hold, we have a pullback, and the first TPU video will be over here, so I would probably break even right here. That's if it does play out properly. Okay, it still seems like it's bearish. Okay, so again, what are we missing here? A market structure shift, right? The market structure shift is what we're missing here. So again, really good stuff to journal, because as you can see, we do not have any market structure shift, because this is just a rejection wick right here. This is just a rejection wick. Okay, I will just highlight this right here. So it's closing above the previous draw on liquidity, but it's just a rejection wick, so therefore it's closing back in this range. Okay, so you need to always be aware of what's going on, right? So as you can see, this is the fair value gap that's tapped into. So if you look at the proper alignment, you can see that there is a 0.5 rejection. So it's always a retracement back towards a certain level when a key level is met on the weekly time frame. So you see it retraces, it comes flooding down here, and then it rushes back towards the fair value gap, and then it fills, and then it goes lower. So always understand that. Okay, so I personally do not prefer using wicks as my drawn liquidity, so it'll be up to here. Okay, so yeah, that's pretty much as of so as you can see, this fair value gap is used as normal. So you can see that boom and boom, we have a 0.5 rejection. We have a we don't quite have a, I mean, I guess you could consider this, but honestly I wouldn't be like super comfortable considering this. Honestly, it's not that bad. Now that I think about it, you can consider this. Yeah, you can consider this. This is like the body right here. So this is definitely the TP. This is what I hate about the 1 hour time frame. Okay, so it does eventually go and hit TP. Again, super choppy price action. But eventually it does react off this fair value gap, and then you see over here it retraces away. So see, this is off the fair value gap over here, and you see the 2 candle rejection. And over here, this is like the main candle, to be honest. And this, because this is the highest candle over here, you see this 0.5 holding. You see they're tracing slightly above and target towards here. So now we have a 1 to 3 from this trade. To be honest, it's a pretty good trade if you think about it. And yeah, we have a retracement over here, and we have a retracement away from it. So we can see that this is a rejection candle. See, it's sweeping this liquidity and then it's retracing away. So honestly, it's not that complicated as far as I'm concerned. I don't quite trust this range, to be honest. Okay, so it seems like, okay, we have a massive market structure shift. And over here, this is a swing point. Or you can even consider this as a swing point. It does retrace away, but then eventually it does pull back. Okay, it does pull back, and as you can see, this is the 2 candle rejection. It does not quite retrace towards the scalp, but it does eventually retrace away, right? So we would target towards the closest draw on liquidity, just like that. It goes and hits. And next we have a, what do we have here? We have a, this is quite a weird dealing range. This is just an inducement because there's a fair value gap right here. So it's reacting off this fair value gap, and it's a balanced price range because we have this little fair value gap, inverse value gap. We have this 2 candle rejection. So if we see a 0.5 hold, honestly I wouldn't consider this range, to be honest, but this is a 0.5 hold, and I would consider putting my stops slightly lower and targeting towards the next draw on liquidity on the weekly time frame. So that's probably right here. Yeah. Let's see how this plays out. Now keep in mind, we did close above the previous breaker structure. If you think about it, over here. Okay. So it does hit, and then it does retrace right after. Okay, so as you can see, it does close above the previous draw on liquidity. So if you can see this, for example, you can see it closes right about, and then it retraces away. So obviously there's a lot more bullish pressure, so it does pull back over here to this inverse value gap and balanced price range, and holds 0.5 and retraces away. The next weekly level, it sweeps this liquidity, it closes back in this range. What does this say? This is a sweep of liquidity, huge sweep of liquidity, and you can see that there's a discount retest, and now we're bearish again. Okay, so you see this, as soon as it hits here, it just retraces away. So crazy price action on Euro USD on that day. But I hope you guys got the idea. Let me backtest for probably like 7 minutes more, to be honest. Okay, seems like we're still bullish. I mean, we're still bearish. Okay, we have a retracement away from, so we have a retracement away from this. So draw on liquidity 0.5 and traces away, goes to draw on liquidity. This is a it's not quite holding a fair value gap. This is such a weird price action range, to be honest, and you can see that this is holding 0.5 and it's retracing away to its close to draw on liquidity, right? Okay. Cool. So let me look for, okay, so we have a market structure shift, and we have a balanced price range right here. We have a balanced price range right here. We have a pullback. Does not quite pull back, to be honest, but it does retrace away, as you can see, right? Why? Because we have a closure in this range, for example. We do not see any market structure shifts over here, and even the market structure shift, and even the minor market structure shift, is a slight closure. So this itself does not prove anything. This could have gone two ways, to be honest. It could have gone towards a buy or sell, but I mean, honestly, the 1 hour time frame, you'll be dealing with a lot more noise. So I would say a top down is ideal. So yeah, that's pretty much as far as I'm concerned. And you can see that there is a retracement from here. You can see that there is a retracement away from it. So yeah, pretty cool stuff, to be honest. And yeah, let me look for a 2 candle rejection right here. Seems like we're holding 0.5, but it's still bearish. Okay, we do not want to sort of make judgments based on that. Again, we're bearish. Okay, always remember that. Bearish, hold, closest draw on liquidity over here. See how this plays out. Boom. So yeah, pretty much, guys. As you can see, we have a retracement back in the fair value gap, and then we have a retracement right after. So of course we have another retracement, but you can see that it's rejecting this price level, but it does not mean that we're bearish, to be honest, because if you look at the weekly ranges, for example, you can see that there's a lot more bearish pressure. There's a little bit more liquidity below, right? So smart money will obviously go for as much liquidity as possible. So this is just a fake out unless we see a change of character. And you'd be surprised at how you'd be invalidated right here. So let's look at this, for example. See what the next few candles do. Okay, fine. So we have a retracement. Okay, that's okay. We have a retracement, but this does not quite mean that we're headed towards we're bullish, for that matter. It just means that we're bearish for now. I mean, we're bullish for now. So understand that this is just a sweep of liquidity. Okay, this is closing right after, but it does not quite seem like it's retracing away. So as you can see, this is a 2 candle rejection. We have a sweep. Oh, it does not quite seem like it's a sweep of liquidity, and we have a rejection right after. So you can see that this is kind of rejected as well right here. Okay, cool. So sometimes you gotta get it wrong, to be honest. There's no right or wrong answer here, but right here, put this here again, target towards the next draw on liquidity. That would be right here. It went up to here. Honestly, I would break even right here if I'm taking such a big trade. Okay, seems fair. What's the reason for this? Let's see. Closed above this range. Okay, this was an unfortunate situation. See that? There's no liquidity in this area. See, there's a retracement right after. So I think you should probably... Okay, it seems like it's selling off as much as possible. You can see that this is the market structure shift. You can see that this is a market structure shift. There's no fair value gaps in this area. It does not quite pull back either. And you can see that there is a fair value gap right here, and there traces away. So yeah, it does not quite seem like everything is fine yet. And we have a 0.5 candle, and it's rejecting, it's holding this level. And again, we're forgetting something. This is the fair value gap, so I would expect a sweep of liquidity and then a retracement array. I need to see a sweep of liquidity. Come on, show me a sweep of liquidity. Are you serious? See, again, there's no sweep of liquidity here, but that's because okay, let me see, probably some sort of weekly range was not met. yeah, it did not quite meet the weekly ranges right here, so it did retrace away, but it's holding this 2 candle rejection right here from this fair value gap. It's holding this level and then it retraces away towards the closest roll on liquidity. Now this is pretty simple, and you can see that this is a 2 candle rejection, and yeah, it does retrace away. You can see that this is a 2 candle rejection right here, and we have a inverse value gap close above. Now this gives me the first reason as to why this might be a change of character. But let's see the next candle. Okay, seems like, let's see if we see a next candle. Okay, so again, this does not mean that we're going bullish. It just means that we have a pre-reasoning, but it does not, if it holds, it has a 2 candle rejection, then I would expect price to be bullish. Again, unless there is a change of character, I wouldn't expect price to be bullish. Again, these are just rejection wicks. Okay, so now we have a market structure shift because we have a strong high broken over here, and then we would expect a pullback towards this fair value gap, and then a retracement away from it. So it does not quite, but again, we're bullish now. We're bullish, and we can see that you can see that price is closing within this range, which means we were retracing towards the swing high, and then now it's headed towards the downside once again. So it's holding this level. Let's see what it does next. That's such a fucking double dookie ass sweep, to be honest. Okay, I got something wrong here. This was not a real high. This is the real swing high. And then you can see that there is a huge rejection, and then you see this price action. So now I would expect price to retrace towards this low. So let's see how it plays out. Okay, guess I was wrong this time. Okay, why? Let's look at the bullish argument. Pulling back and tracing away. So look at it from a fresh perspective. You can see that there is a high, and there is a higher high broken. It does retrace back, makes a new high, and retraces away. So yeah, it honestly, it's possible. And as you can see, I wouldn't trust these ranges, to be honest. I wouldn't trust a sweep off of a fair value gap. I would expect a sweep off of a high on the weekly time frame, to be honest. But on the 1 hour time frame, it seems like it's valid. Okay, so as you can see, there is a fair value gap right here, and there is a rejection. Honestly, it does close above, so this is one of those situations where it pulls back here. But honestly, we can't tell that this is a like complete 180. Could be just a pullback towards this fair value gap, and then a rejection just to go higher. Because I would consider the weekly levels to be the real targets, right? The real draws on liquidity, these short-term highs on the 1 hour time frame. So if you look at such a weird SMT, but again, we're closing above this range. So as you can see, it's open here, closed here, which means it's closing. We have a lot more bullish pressure, and we have a fair value gap, so it's retracing back in the fair value gap. It's holding, which gives me the understanding that price is headed towards here. Okay. Again, this is exactly why I do not target towards the wicks. Again, once again, boom, it hits here and then it traces away. See? So it's simple. It's honestly not that complicated. In this case, it would be a little unfortunate because Asia Opens took out the liquidity. It's kind of an ass trade, to be honest, but again, we can't complain, right? Because this closes back in the range, and then again, I would expect a 0.5 to be holding. I mean, in this case, it would hold as well, and it would fuck you over. So yeah, there are times like this, so that's why you always gotta have proper risk management as well. So this is a fair value gap, as you can see. This is a 2 candle rejection, and it does close above this draw on liquidity, so therefore, as you can see, this closes above this draw on liquidity, so therefore it pulls back to the fair value gap, and then it traces away. So yeah, just like that. I don't know what's going on here, but Again, it retraces towards the closest draw on liquidity. It seems like it's rejecting this price level, but again, there's no market structure shift to prove that. It seems like it's rejecting this price level, but there is no market structure shift. So keep that in mind. And we have a low created over here, so I would want something like this, and then a retracement away. So I want some sort of low to be broken. Okay, seems fair. So we have a sweep of liquidity. It's holding this 0.5. It's holding this 0.5, and then it retraces right after. So understand that this is a close above the previous draw on liquidity, and this is a close back in the fair value gap, and then it retraces away towards the close and draw on liquidity. Now over here, as you can see, it's sweeping this liquidity, and then it's retracing back in this range, and yeah, it's holding this 0.5. It's retracing towards this closest. What's going on here? Let me think. It's sweeping this liquidity. It's closing back in this 0.5 range. It's holding 0.5. It's retracing away. Hit this TP. It rejects this price level again. Once again, it rejects this price level. We have a market structure shift. That's why the wicks, the bodies, are always trustworthy, because the bodies are where price goes and then it dips, right? So boom, and then it retraces away. So really understand this, okay? So make sure you understand this. And then we have a 2 candle rejection, guys, and then we have a retracement right after. So understand that. Okay, fair enough. So we have a market shift once again, because this closes above the previous draw on liquidity, and boom, we have a pullback. We would expect a 2 candle rejection. Okay, boom, 2 candle rejection right here, 0.5 holding. Would expect price slightly lower. Put it here. Man, okay, that's all right. So we would expect, again, this is why I don't trust these ranges, like the 1 hour time frame, because these ranges, okay, it seems like we entered from honestly, it was a discount entry. Okay, so this is one of those times where you just can't help it, right? Okay, so honestly speaking, yeah, you need a lot more liquidity. So as you can see, there is a fair value gap over here. Market structure shift. It's not a sweeping liquidity over here, and yeah, it closed above, as you can see. Closed above this draw, previous draw on liquidity, even this draw on liquidity. It closed above this range, and then boom, it passes right after towards the next weekly level, and then it retraces right after it closes back in the range. It's exactly how price works. Okay, so this draw on liquidity, it's rejecting the price level, and then it passes right after. Boom. Exactly why I target the bodies, not the wicks. It goes over here, creates equal lows, but I would trust the bodies over the wicks any day of the week. Okay, any day of the week. Get it? Wick. Okay, that was not funny, but as you can see, this is a 2 candle rejection, and it's closing above this inverse rally gap, and this is a first retracement. I wouldn't consider this to be a high. It could be a pre-high, but honestly I wouldn't trust this. But yes, it does close above this. It does hold this level. I'm assuming it's from a fair value gap. It does not seem like it's from a fair value gap. I'm assuming it's from this fair value gap. 2 candle rejection. If it does retrace here, and if it closes above, I would trust this range. Nope, it's rejecting its price level and retracing away. Now it's headed towards the downside. Boom, close the draw on liquidity, goes away. Now we have a market structure shift. Now we have a market structure. Now this is a rejection, but this is the candle that closes above. Therefore, we have a market structure shift. So I would expect price to pull back here and then retrace away. So let's see what price does next. Okay, seems like price is holding this price level, and let's hope price holds this 0.5. And we would expect a retracement right after. Boom. 1 to 3. Boom. Impulse. Bazinga. So we have this candle closing above. So I would expect price to hold 0.5, I mean discount price ranges. As you can see, it's sweeping this liquidity because this was in this fair value gap. Swept this liquidity, hold this 2 candle rejection, and I would expect price to be bullish. Now, over here. Boom, just like that. So now it closes back in this range, as you can see. Okay, it did kind of sweep this liquidity, but not quite, because it was almost off the range. But it did close above, but it did sweep this liquidity and then it retraced back in the range. So I would expect price to low-key still be bullish after rejecting towards a discount price range. For example, it sweeps this liquidity below this low. Below this low, it sweeps this liquidity, would hold this 2 candle rejection, 0.5, hold 0.5. Okay, 3 signs, cool. Our stops here, target towards the closest drawn liquidity, and I guess I was wrong this time. Okay, so again, why did this happen? No market structure shift, right? So again, this is the importance of a market structure shift on the, even on the higher time frames, right? So you always need to wait for a market structure shift. So for example, right here, we have this high, this higher high, then we have a retracement right after. So you always need a market structure shift. So you need a market structure shift for, so obviously right here, as you can see, it does not quite, okay, it does not quite retrace away. But as far as I'm concerned, you can see that there's a close above, but it does not quite close again. And then it does not close again, it closes within this range and then it retraces away back this range. Okay, so yeah, it's not that complicated to be honest, but okay. Seems like we're still headed towards the downside because it's still, there's a lot more bearish pressure over here. So over here, I would expect a 2 candle rejection, and I do not quite see a 2 candle rejection yet. Okay, but I want to see a market structure shift at least for this lower high to be broken. Nope, not quite, not quite, not quite. Not getting faked out by this. At least for this lower high to be broken. Proper bodies. Close above, come on. It's not quite close above. It's rejecting this price level. I would expect a close up the, okay, so it seems like it's sweeping liquidity. It's holding, if you look at this from an inverse perspective, holds this price range. It closes back in this range, as you can see, and then it holds this 0.5 and retraces away to this close strong liquidity. Now I think you guys get the idea. You should be very attentive of proper market structure shifts. And yeah, I'll probably be putting this as a normal video as well, so that I hope you guys get some idea, and I hope you guys learned something from this video as well. And yeah, that's pretty much it for this video, and I hope to improve even on the 1 hour time frame, because I believe it's a good time frame if you can master it properly. And yeah, there's no market structure shift here, so obviously it's holding this price range and it retraces away towards the closure drawn liquidity. So it's not that complicated, it's just a little difficult. Okay, so yeah, that's pretty much it, guys. I think that's enough for now. Hope you guys got something out of this video, live stream for that matter.